Anyway, let's talk about something that was really a market in despair the last time Angie and I got together, talking about the grain markets. Angie, welcome back to Face.
Hey.
The tone has changed
Yeah.
since
Yeah. It was
I think we talked at the bottom.
yeah,
I'm
I
not
think we did.
kidding.
I was just thinking about that the other day. I was like, when did we talk? What day was it that we talked the last time? Because I think
It
it was
was
near the bottom there.
yeah, it was near the lows. So you tell me fundamentally what's changed as I pull up some of these grain charts here. Um, what this
Yeah.
is probably where we were. I think it was in March,
Mm-hmm.
and the corn and the beans looked even worse. So corn was doing this, confirm low.
Mm-hmm.
Again, late February, March, we do about a 3 month schedule here, rotation, here were the beans.
Mm-hmm.
What has changed? Is it export related? Is it weather related? I know that we're flipping from El Nino to La Nina. Is that a factor as well?
Yeah. I mean, all of it is at this point in time. It's not necessarily demand influenced right now, or demand driven right now. I mean, we have seen some decent thoughts about potential increases in demand as we move ahead, especially in wheat here recently with some
Yeah,
of the conversations about reductions in world production. But yeah, I mean, I would say that the biggest thing
look at
right now
that.
that we're looking at is that uh, global grain production expectations, the best way to put it, are reduced from where they were the last time we spoke. The last time we spoke, it was basically during what would typically be a slow part of the year. We'd already kind of confirmed most of the first round of South American production, at least Brazilian production. We had confirmed or thought that we were good with Northern Hemisphere production, specifically the Black Sea and some of these other areas. But over the last couple of months, we've had some surprising changes take place. We're looking at,
Yeah.
smaller than what was expected to be really robust grain supply. So we're kind of stuck in a little bit of a middle where it's not necessarily something that you could say we need to ration demand or encourage significant gains in price, but we are at a bit of an impasse here where if we were to see some continuation of production problems in the Northern Hemisphere, a continuation of drought in the Black Sea, Russia specifically, some problems in Western Europe with too much rain. And, if we were to see the US and North America have a production issue, then suddenly we're not quite as comfortable as what we thought we were. And so at this point, I'd say we're reintroducing, what would need to be a risk premium into this market as we head into the summer months.
Okay, so wheat is a leader. Didn't give up
Yes.
as much on the downside, and I was telling people to get long before we took out this 50-week moving average, which is a big deal.
Yeah.
And so why is wheat the leader? And I think the fact that it's threatening the 200 week guys, not the 200 day, is also significant where you have to buy any pullback. Because, when you think about it, this was the invasion, right?
Hmm.
So we got up to what? Was it 13, $14 wheat? It looks like 13.63
Hmm.
down to 5. So call it $8, $8 decline. So
Yeah.
even if we're not entering a new bull market, Angie, uh, isn't it reasonable to think that we could rally $4 off the lows halfway back, take you to $9 beans, $9
It's
wheat?
Yeah, I mean, it's exceptionally reasonable at this point in time. I mean, it really is it's going to have to be led by the cash market, though. That's going to be the thing that you're all going to have to really pay attention to, is what happens when it comes to the depth and the level that Russia is offering. So when I say depth, how much are they willing to sell when it comes to moving grain into the export market, and at what values are you seeing them willing to sell? And so one of the things that we've seen in this wheat market rally here as of late, and you go back to the invasion levels and some of that stuff, it doesn't look near as
Yeah.
impressive as what it feels when you've sat here and stared at, mid $5 wheat for the bulk of the year. But the fact of the matter is, much of this has been driven by fund buying, speculative short covering, and really not necessarily driven by the consumer, the world end user. You've seen Egypt come in and try to get some bushels bought, but they really don't have a bunch of cash behind them to do some additional purchasing. And so there is some questions as to what we could see happen here if you were to see the farmer remain completely unengaged, because right now they don't know what they're going to have from a production standpoint, and they're not
Yeah.
selling a bunch of wheat. And so, yes, the potential is there, but it's going to have to be influenced by, maybe another round of not only speculative short covering, but a consumer short covering, to kind of cover some of their demand for the Q4 period. But it definitely could move us to where you could see a recovery towards that $8 mark, towards that $9 mark. But, first we kind of have
Okay.
to battle the short-term resistance levels that we're
All right.
sitting at and
So
see
I
if we
think
can
we
break out
could,
above them.
yeah, we could pull back maybe halfway to 620. What could be
Mhm.
behind a pullback to 620? Anything that you're seeing fundamentally
Yeah,
that could
the
drive that?
improvement. Yeah, the improvement in the U.S. weather, you are seeing some increase in rain amounts here in the southern plains, and then you're seeing the western Canadian prairies see some improvement in their weather outlook too. So that could be something that you could see fundamentally kind of pressure the market, and that's one of the things that's weird this year versus the year we moved towards 13, is that we just have a lot of leftover supply still sitting, here in the US in the softwood wheat carry out here you've got over in the Black Sea and parts of Europe, so there's some different setups, but yeah, it's definitely something to be paying attention to.
Okay, so I'm drawing my bushel basket right
Yeah.
there, Angie.
Yep. Yeah.
Everyone get your wheat chart out and draw your bushel basket there between 620 if it gets there. I don't know if it go to six to over $2 move here,
Hmm.
which means the next could be 320, which would take it to nine.
Yes.
Anyway, that's a strength. Can you explain why beans are lagging compared to
Yeah.
wheat?
Beans don't have the story when it comes to balance sheet adjustments that wheat does right now. Beans, for the most part, the Argentina crop is going to be much better than what it was a year ago, looking at about double the crop size. Now, that sounds huge on paper, but you have to remember that the Argentina crop was half of what it should be a year
Yeah.
ago. So basically we're seeing Argentina return back to normal, and we're seeing Brazil have reasonable production. It wasn't what we saw a year ago. It was definitely reduced. There's still a lot of questions over what we've seen lost in the flooding in Rio Grande do Sul and some of these other places. But from an overall standpoint, if you look at beans on paper, we have a plentiful supply. It looks like U.S.
Okay.
carryout should continue to increase because we're going to struggle to meet U.S. export projections currently. And then we have new crop sales really, really lagging, with an idea that we're going to see a continuation of the trade war with China. And so beans, when it comes down to it, and I had a customer ask me about beans the other day, and I straight up said, on paper, on the balance sheet, beans should be trading closer to 10.50 to $11. From an emotion standpoint, from a cash market standpoint, and because they're a protein source, they could touch
Yes.
13 without even looking back or any real fundamental driver to push them that direction.
Coincidence, important moving averager on the weekly. You're talking about the 50 week,
Mhm.
and also I think you're the one that mentioned that it's also being used for jet fuel.
Yes, yep. There's the renewable diesel. You're looking at, soybean oil. You've seen a significant increase in domestic crush. Soybeans are really one of those things where we use either, it used to be half and half. Half of them were crushed in the US to make soybean oil, soybean meal, things of that nature. And the other half were exported for other people to do that. And so we've seen a giant leap in US crush demand, which is helping underpin the bean market. But it's definitely, we've also seen a significant increase in used cooking oil imports from China that's undercutting that soybean oil demand. And so we've seen soybean oil really trade pretty violently here over the last couple of years as a result.
Okay, and there's my bushel basket for a buy zone on beans between 1160 and 1180, and you're wrong under 1120. So
Mhm.
let's talk about corn. Corn acting a little better than beans. Really, they do.
Yeah.
We start getting through 460. There's some upside. Why is corn outperforming beans?
Corn, is going to be heavily influenced by wheat. And so if you look at the corn
Okay.
wheat spread right now, you're talking about a spread difference of what, $2.35, give or take, just quick
Hmm.
math looking at the July. Traditionally, you would see that trade in that $1.30 to range. There's an
Mm,
argument that wheat is a true. When it comes down to it, if wheat is cheap, if wheat is relatively cheap, speaking to corn, compared to corn, or relatively cheap compared to soybean meal as well, because wheat brings with it some protein, wheat will go into feed rations. And so one of the reasons that you saw corn fall out of bed as much as it had over the last year or so is that
yeah.
we had displaced a good amount of corn that was traditionally fed around the world by cheaper wheat. So if you look at wheat trading at $5 and you look at corn trading at $5, most folks are going to look to trade feed wheat because it does bring with it a bit more in the way of value from a ration standpoint. And so corn and wheat are tend to be a little bit lockstep. And so that's one of the things. Corn has started to see some support because of the higher moves in the wheat market. It hasn't kept up simply because its balance sheet similar to that of beans. On paper, we look like we have more than enough corn. But similar to what we're seeing in wheat, the idea of production or what we will see from a global production standpoint has shifted much lower here over the last 3, 4 months. If you go back and look at late January, February timeframe, a lot of folks were expecting a 61 million metric ton Argentina corn crop. We had big
Mm,
expectations for U.S. planted acreage and U.S. yields and all of these things. And we're starting to see that get trimmed back. The Ukrainian surplus of grain that we had seen kind of pressuring European prices appears to have been used up. We're seeing Spain come back into the US corn market, the Brazilian corn market. They had been buying a significant amount of Ukrainian bushels. And so corn is lagging, simply because on similar to the soybean story, on paper, we've got more than enough. We don't really have a significant amount of demand or a demand story that's going to show up to surprise us. And so now we're here to focus on supply. And at this point in time in the year, everyone kind of assumes that we're going to have a decent production season and more than adequate supply. But I give pause just simply because I've watched what the weather has been doing over the last few months here, and I don't think we know what normal is anymore.
yeah, and I don't think you know what normal in Ukraine is for the last couple of years, despite all the fears of
Yeah.
the grain not getting out of there, it got out of there. But now with counteroffensives going,
Hmm.
and there's a chance Putin takes over Ukraine. Then what happens to wheat prices?
Well, it's something that is definitely super important to watch, and it's been on my radar for a while here for a minute. I mean, I think the biggest thing that you're looking at is not only a transition in the war, you're seeing more of the Western Ukrainian folks being impacted. And I wrote a column about it here a few months back where folks, really had asked me, why is the Ukrainian war having no influence on grain prices anymore? And when it had
Yeah,
come down to it, is it was containment. The war itself was kind of stuck in a bit of a
right,
stalemate. We weren't impacting the ability to export. We were moving grain into the
right.
marketplace. We were producing the same amount of corn or close to it grain wise as what we had pre-invasion. But now we're really looking at it to where that's an issue, with Zelensky saying what Ukraine has, 25% capacity to protect their airspace over Kiev.
Yeah,
And you've got all of these different things that are happening that really have changed the situation. And so it's another thing I have, my eyes on. Russia will grow wheat. You'll see a decent wheat crop. The biggest influence, I feel like, yes, a wheat would be influenced, but it would be corn that would see the biggest impact if we were to see Ukraine kind of removed from the global market structure, simply
interesting.
because most of what Ukraine produces for corn is exported. And we're talking, upwards of 17, 18 million metric ton of demand that would be shifted back to the US and Brazil if Ukraine wasn't able to ship at peace. And so yeah,
Like
I
corn
think
calls.
that's yeah, that's it's
Really,
definitely something that I'm watching where it gives
go
me
out to
great
the end of
pause.
the year and buy some $5 calls or something. It's a nice
That's
spec.
I truly feel in corn there's an opportunity there that we could see it trade 550 in the next 4 weeks,
Okay.
but also be down
Wow.
to, $4.20 by
Yeah.
October.
Okay. Okay.
So
So we talked about this wild card in Ukraine now. Why don't we throw in one more wild card?
I like
And
wild cards.
this is something that almost every commodity will go up if I'm right long term on the Dixie, which
Hmm.
on the verge of rolling over and breaking down after really moving sideways for a year or so.
Hmm.
Weaker dollar, Angie, what kind of impact is that going to have on grain prices?
Oh, that would definitely help. A weaker dollar obviously makes our grain, makes our exportable supplies more competitive. The US, when it comes down to it, has the highest quality crop with the best logistical capacity in the world. Basically meaning that, whatever you need, we can get it to you at whatever quantity you want and probably can figure out a price that'll work. You know what I mean? And so I think if you were to see the dollar continue to weaken and fall off here, and we were able to kind of step up to where we can say, hey, not only do we have it available, we can ship it, and it's relatively competitive from a price standpoint, it's going to be super helpful. I mean, we've seen reasonable export demand even with a stronger dollar. And so to see that fall off and to hear some of the things or to watch some of the things that I'm watching when it comes to production hiccups and things of that nature, to see the dollar drop off, it would make it to where we'd probably see the USDA's export forecast come more into line or be more realistic at this point. Right now, with the strong dollar, and the global competition that we're seeing, the U.S. does kind of take a second or third seat behind some of our competitors, and so it's definitely going to be something to watch and could put a shot in the arm for U.S. demand that's been struggling here for a bit. Over the last few years, we've seen that
Yeah.
dollar strength.
Okay. So the grains have, I think, plenty going for them, and do your fib work, and they do have ETFs, guys,
Hmm.
for trading. You don't have to trade futures, and there's even a DBA, which is an agricultural ETF, and Tecrium has a wheat, corn,
Hmm.
beans. So there are ways to play it. So Angie, I appreciate your fundamental analysis. It uh, kind of explains to me what I was seeing technically. And you know what's interesting about these trade setups now? Like I wouldn't reach for wheat, but if this happened, is that down here when last we were talking March, let's see, March, April, May, yeah, it was probably then. Um, there was no technical reason to buy the corn. I mean, yeah, it was
Oh.
cheap. There was some divergence, the wheat, but now there's a reason so that if you get a pullback, you've already had the base. It's a little more dramatic there, but same with beans. You've had two higher lows, so
Hmm.
why not try a break? You don't even have to risk the lows. You could risk the higher lows. And, it was a theory down here. Now it's turned into at least the beginnings, unless it aborts and takes it out, goes to new
Hmm.
lows. That's always a risk. And the same with the corn. So, it's been a long time, uh, 2.5 years since we had bull markets and grains. If you're a commodity bull, they are still definitely one of the most overlooked complexes out there. Don't you think, Angie?
Oh, I would agree. I definitely think there are a ton of short-term opportunities. You said that about if we fail at this level, we could go to the next one. But
Yeah.
the reality is, this time of year, we tend to see at least a bit of support come into play from the seasonals. For corn, we tend to trade higher at least until we work our way to where we can see what the post 4th of July forecast looks like. We need to see what pollination weather and things of that nature, what we're going to be looking at there. And then for beans, honestly, we'll probably stay relatively supported as we work our way into to August, and corn, or wheat, excuse me, much the same, just simply until we get a better feel for what we're looking at, from a production standpoint and see more in the way of farmers selling. Probably going to see the market have some, solid floors underneath it for a bit of time here.
Okay. So the tincture of time, how things have changed in a quarter from
Yeah,
despair to hope.
yeah.
So, things are looking more constructive, and great interview. I think we're a good team. You run through the markets and I break down some price structure for people. And I think we gave them a real vision of what could be coming down the pike in the
Yeah,
grain
thank you for
markets,
having me. I
Angie.
always enjoy
Yeah.
it.
I learned from you, Angie. So thank you very much for being here. And I guess we'll be talking late summer, early fall, when the drought's in full swing in the grain belts.
When I'm looking at South America and pulling my
Just,
hair out. I can't
as
wait.
a,
It's so much
it's
fun.
just I thought I'd end it with a little Nostrapinker. That's all.
I
So
like
Angie
it.
Setzer, this is where you find her. You
Yeah.
could go to consutsag.net, and she does webinars. She helps people that are actually involved in agriculture hedge their products. So if maybe a good time to with the dollar possibly breaking down, to have dollar hedges, and grains could be a pretty good dollar hedge. You can't eat gold, right?
No.
So anyway, that's a wrap, and an asset class for you guys to consider. Thanks again, Angie, for being with us.
Thanks for having me.
All right, my trading warrior sister, Angie Setzer, find her on X at Goddess of Grain. She doesn't ask for you to, bring gifts. Just DM would work. And that's a wrap for me, everyone. Good to be back in the saddle. And we'll see everyone for Turnaround Tuesday. Adios. People are thanking you. Patrick says thank you. Sinatra. So follow Angie if you want to know about that stuff that grows out of the ground. And don't just count your ears. I'm not talking about the ones on your head either. Count your blessings. Adios. Oh yeah, turn around Wednesday, George. See, I'm still on my head, still in Dana Point. Okay. Thanks, buddy.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.